to last this week in crypto of 2025. We've got a lot to go over today after a pretty tumultuous time. If you like volatility, this has been a pretty big week for you. You've watched the Fed cut interest rates as expected for a third consecutive time, going back to the September, November, and December cuts. Each of those traders were hoping to see a 25 BPS cut in interest rates, which, of course, if you've been paying any attention over the past year or in the last few years, the monetary policy by the Fed here in the US does seem to drastically have an impact on crypto, despite it being kind of the decentralized playground out there. It's so correlated with the S&P 500 for the last couple of years that crypto now pays a lot of attention to what interest rates look like on a month-to-month basis. And, after some disappointing rises in 2022 in the interest rates, which caused a huge downfall, we saw some gradual cuts 2023 and 2024, and then 3 straight in 2025 after, the first half of the year was, Donald Trump and Jerome Powell kind of playing a little bit of a game with each other, if you will, where they were, aggressively negotiating what the true interest rates should be. Trump has managed to get 75 BPS of the interest rates cut, which should make him happy. And, the stock market is booming along, but crypto is playing catch up here. You can see over the past week, Bitcoin is up 2% going back to 1 week ago when we were doing this. Tether, of course, is a stablecoin. XRP, just a little bit down. Dogecoin down. Most of these are pretty low in terms of, Sharpe ratio. They're not going too far below or above 0%. If we go to just the past 24 hours, though, it's actually going to look like quite a different story. So we've kind of had a regression to the mean where we started the week low and we've rebounded pretty high over the past 24 hours. So as usual, and we'll get to this, rate cuts resulted in kind of a buy the rumor, sell the news effect where people were excited. They got their FOMO in as soon as the news was made. And then we watched prices actually fall and shock a lot of the small retail traders out there. This is kind of a tale as old as time. You see the initial, hour going the way retail expected to, then the next couple of days or even couple of weeks sometimes going the opposite direction that retail expected for what was supposed to be bullish news. And then we start to see things pick up. Well, this was kind of a mini reaction. Some say that with each, successive interest rate announcement, it matters less and less for crypto. I tend to disagree. I still think it matters a lot. But we saw basically a couple days of a downfall, Bitcoin going back to 89K, then jumping back up to about 92.5 where it is now. So looking pretty good overall. You can see the trader volume overall for the assets that we cover is down a little over 7.5% compared to a week ago. The overall market cap fell 0.3% despite Bitcoin going up 2.5%. So that means altcoins are struggling a bit more. Social volume, not a big change in Bitcoin, only 3% less discussion than last week. Ethereum only 4% more than last week. So essentially the same level of social volume. But let's look at the article that I put out a couple days ago. And we did a deep dive on exactly what happened, the hawkish stance that Jerome Powell had at the October meeting and how it didn't really translate into holding steady with the interest rates this time. He did end up cutting after the poly market predicted a 97% chance of a 25 BPS decrease. They were correct, as they usually are, especially when it's this far skewed in one direction of expectations. We did have a little bit of FUD right before the interest rate announcement with DeFi Tracer on X announcing that Binance was dumping millions of Bitcoin ahead of the FOMC meeting. They sold over $100 million in Bitcoin in just an hour. What do they know? So, there were predictions that there were some insiders who knew it would be a bad decision. Well, this ended up being kind of a fear-mongering post. I don't know if it was intentional or not. We don't know anything about him. But nevertheless, there always seems to be drama right before and then kind of a relief, at least these past 3 times when interest rate cuts happened, following the announcement. We did a deep dive. This was posted across social media and some news networks. Basically, the differences between what Powell said this time versus last time. In both statements, he described an economy growing at a moderate pace. I won't get too into the weeds here, but the overall tone showed that the Fed was trying to keep inflation moving toward 2% while still supporting employment. However, the main change from October, the last Fed meeting, to December, this meeting, was the fact that they decided to slow down the reduction of its securities holdings starting December 1st, meaning it was reducing how quickly it shrank its balance sheet. But by December 10th, the Fed said bank reserve levels had fallen too much, so it would begin buying short-term treasury bills again to keep reserves ample. Another difference is the Fed's description of the labor market. In October, unemployment edged up but remained low, while by December, it had continued rising through September. So long story short, we saw peak euphoria for Bitcoin actually about 8-9 hours before the Fed rate announcement was made. And then you can see the announcement was made here. Prices had a nice moderate 2 to 3% jump. Not a lot of FOMO here, which is interesting. Maybe a little bit of FOMO right there. I know it doesn't look like it compared to these huge bars, but that's definitely a FOMO bar right here. And then right as that FOMO bar occurred, we fall. It's even more apparent with Ethereum, where you can see a little bit of euphoria right before the Fed cuts rates. And then look at Ethereum once it gets above 34.33 was where it hit its top. Massive positive commentary compared to negative commentary. That's how we calculate this stuff. It's just a pure ratio. And then right as that happened, these are 15-minute intervals, we see the price plummet. And this is what a lot of altcoins looked like. Even though Bitcoin didn't have an exact euphoric top, Ethereum and many alts did. I think Cardano was up there too. There were some other ones. And then we see this subsequent fall. So in short, on the year, Bitcoin is down about 3.5%. S&P 500 is up 17.5%. And gold is up over 61%. These are dramatic differences between the 3 sectors. Yes, there's still a correlation when you look at Bitcoin and the S&P. But you can see some separation here. Bitcoin is in green here. Let me make it a little bigger. It's in green. You can see the separation right around November 24th, 25th, where it stayed flat, but both the S&P 500 and gold surged. And the S&P 500 made another all-time high yesterday. Gold is, or I'm sorry, on the 10th it did. I think it was actually slightly down yesterday. Gold is seeking another all-time high very shortly, it looks like, while Bitcoin is kind of just treading water since late November. So that's frustrating traders. And we're going to look in a minute as to whether micro wallets are actually dumping because they're getting impatient now, or if they're kind of still hanging on. Yeah, I'll look at the up-to-date chart. This was from a couple days ago, so hang tight. Let me get to that now. So here we have the 10 to 10K BTC wallets and the percentage of supply held, the 0.01 BTC wallets and their supply held. And then for fun, I also just did the 10 all the way to infinity to include all those huge exchange wallets that are kind of there for liquidity purposes. So the 10 to 10K wallets, we're looking pretty up at the turn of the month. So after November 30th, up until December 6th, you can see a jump here after a long drop, right? Because this was the drop we've been talking about on our shows pretty much since the all-time high occurred. They started dumping on October 8th, 2 days after the all-time high happened, massively all the way until November 30th. And you can see how prices during that time dropped about 31%, Bitcoin's market value. Since that time, they've accumulated again, and the price is back up 7%. Not a coincidence. The green line, from what I have seen, dictates where prices go next more than almost any other metric we have. I'm not going to say definitively because I want to leave room for further study, but it's definitely in the top 3, and we pay close attention to it. You should too. Now, it works best in tandem when you contrast that with the red line here. What are the retail holders doing, the small wallets? Well, when the sharks and whales were dumping here, you can see how the retail traders were really accumulating aggressively. They did have this minor dump in mid-November, and then they resumed their accumulation. A little bit of back and forth here over the last week, maybe 5 to 6 days, but I don't see any sign of them really dumping, the little supply that they've been accumulating. And this is a very good reflection of their sentiment. So we might see a few of our sentiment metrics showing, sometimes on social media where they talk about pain or how they're selling or crypto's a scam, all this stuff that indicates negativity. But ultimately, it comes down to what are they actually doing with their bags? Well, collectively, all the small wallets, which hold a little, just under 0.25% of all the Bitcoin in existence, they are still on the up pretty much since that all-time high date. They've been trying to buy these dips unsuccessfully. So they're getting more and more coins in their bags as prices have gone down. They're currently down about 24-ish% since the all-time high, to be exact. But we need to see this line start to move down in tandem with this green line moving up. Now, for what it's worth, the 10 or above line that goes beyond 10,000, they're still, kind of moving up very steadily. Call this because of miners. Binance, some of the largest centralized exchanges are always increasing their liquidity over time. So I don't see anything wrong with this whatsoever. We just need to see retail start to show some signs of capitulation, giving up, frustration, stuff like that. So on that note of frustration, what are we seeing in terms of their mentions of buying the dip? Now, we haven't had a major one other than maybe this one on December 10th after the 3 to 4% pullback from Bitcoin when we got to the 89Ks. And we did not see much interest in buying the dip, which is generally good. When we do see a lot of interest in buying the dip, that's when prices tend to still go down long term. So the fact that this line is getting smaller and smaller is a good thing overall. I like the sign of this, and I think that the less people talk about us being even in a dip, let alone wanting to buy it, the better. Let's just take a quick up-to-date look at the comparison between the S&P, gold, and Bitcoin. Yeah, gold is still surging away here. S&P 500, we'll get more data as the day progresses for the stock markets. They just opened about half an hour here in the US, and then you can see Bitcoin still lagging behind. So again, the S&P is outpacing Bitcoin significantly on the year. Gold is dramatically outpacing both. So we talk about digital gold versus real gold. The real gold bugs out there have been very proud of the way actual physical gold has performed this year. Talk about silver, platinum, some others. They're doing pretty well. Perhaps this is due to the threat of war, tariff threats, things like that, that really threaten the potential of capitalism and it continuing to grow. That's the kind of thing that typically makes gold, silver thrive. And throughout the year, they've been doing so. But it has been a surprise to many, including myself, to see Bitcoin lagging behind the S&P as much as it has. So that's something we're going to continue to monitor. As for some other trending stories, as you guys probably know, you can go to the trending stories dashboard on the social trends tab here and check out what the top rising topics are across social media. Top one is Do Kwon being sentenced to 15 years in prison for a $40 billion fraud. And that's related to the collapse of Terra USD. So a victory for, I think, many who have been seeking justice for their losses in Luna tokens. Solana Breakpoint XRP. This is referring to Solana Breakpoint 2026 held in London, marking a major event for the ecosystem. Hex Trust launched wrapped XRP on Solana via Layer 0. If you're following Solana and wrapped XRP, this is probably an important topic to you. And Solana Breakpoint 2026 being announced that it'll be in London has caused some hype for people who want to go to that event. Also, the SEC has approved DTCC's plan to tokenize stocks, bonds, and US treasuries on the blockchain. This move enables trillions in traditional assets to flow on-chain, bridging Wall Street with crypto infrastructure. We've also got YouTube now allowing US creators to receive payouts in PayPal's stablecoin. This adds to crypto's overall adoption and overall is a good sign for crypto's future, considering one of the top stablecoins out there is now a payout method for the millions upon millions of YouTube creators. There's also debate over the 4-year cycle. So we've talked about this on a lot of previous episodes, you know, how the halving always tends to bring good fortune the year it comes out. 2024 was the previous halving, and now we're in year 2. You know, going back to 2020, that was a bit of a wash due to COVID and the shakeup that had on markets. It actually crashed significantly in March and April. And then the rest of the year, it was actually quite a rally. And then the year after, 2021, was an extremely good year for crypto. The equivalent of that would have been 2025, which was not a good year for crypto. It was kind of a break-even year for Bitcoin and a loss year for most of crypto. So, you know, it's hard to give my full take on the 4-year cycle. I just know that there's a lot of debate about it right now because people continue to try to mark each year as predictable based on the past. I stand with the opinion of there not being nearly enough years in crypto's existence to be able to look at the sample size and say this is enough to say 2025 is going to be just like 2021 and 2017. 2026 is going to be just like 2022 and 2018. It's tough to say. People are fearing 2026 for what it's worth. So this is a bit of a bearish debate overall, because for people who do believe in the 4-year cycle, if you compare 2026, our upcoming year, to 2022, which was an awful year for Bitcoin, or 2018, which was also an awful year for Bitcoin, we could be in their opinion, for a very tough ride. It's, again, in my opinion, I don't think there's been nearly enough time sample to definitively say X years after or before a halving is always going to be bullish or bearish. I just think there's way too many factors now, especially with institutionals being as involved as they are with crypto now, and so many other factors and new players and new decisions being made about crypto's future, and how much it's been adopted compared to the past. And speaking of adoption, let's take a look at what's been going on, not just short term, but we'll start with the last 5 years so I can illustrate my point. So you can see transaction volume for Bitcoin way more happening throughout 2021 and 2022. Some argue that this was kind of the peak adoption time for crypto. And yes, even though it's fallen significantly, price has bloomed. I don't believe there's a significant correlation between transaction volume needing to rise and price needing to rise. It's all kind of based on different segments and, how many wallets are interacting on the network during a given year. So, if I were to zoom in from December 2022 to now, hey, all looks good because it's been rising over the last 3 years. But obviously, because of that reset button that happened sometime in Q4 of 2022, and we fell dramatically due to perhaps a lot of algos giving up and not returning, that's changed the amount of transaction volume happening on a daily basis. I don't think that's the end of the world. What I actually think is more important would be the amount of daily active addresses, which has been going down over time. You can see, let me just hide everything else for a moment. The amount of daily active addresses peaking back in May 2021 was a little over 1.1 million. Now the average is about 718K. That's a pretty significant drop. If I hold down Shift and I just look at the percentage, yeah, it's dropped by about 35% over the past 5-ish years or so. Pretty significant. If I look at circulation, also moving down over time. And if I look at network growth, also moving down over time. So that to me is still a long-term concern. We're not getting a rising amount of utility for Bitcoin. In fact, we're actually getting less and less activity over time. And to me, we do need to see for the long term, an increasing amount of new addresses being created. That isn't happening. An increasing amount of unique tokens being circulated. We look at unique tokens because that's a better way of understanding the true amount of coins being circulated rather than including wash trading, which could be done by algo bots all day long and skew the data. And of course, we need to see more unique addresses interacting on the network, which is also a nice way to comb through what the algo bots are doing. In terms of MVRV, I've actually got a comparison chart up. I put out a post yesterday about it. Let's make sure it's up to date. So look at how MVRV was in late November. A lot of people are kicking themselves wishing they could have bought the dip about 3-ish weeks ago, 3.5 weeks ago, when we were bottoming out, at least for Bitcoin, at around 81K or so. But all of the top assets and a lot of other altcoins were kind of hitting their bottom around this time. And just looking at Bitcoin, Ethereum, Cardano, XRP, and Chainlink here, you can see their corresponding colors up here at the top. They're all extremely negative at this point. So if you're looking for a buy low opportunity, this was really the time to do it because the average traders were down significantly, implying there's far less risk in buying while others are in pain. And then as time went on, you can see how it rose a little bit. We get one more big drop at the end of the month. There's one more big opportunity to buy while most of the MVRVs are in double-digit negative numbers here. And then we go positive. Once we go positive, prices go down. Kind of neutral here, so it's a little harder to predict. And then finally, just about right up until the interest rate hike, reduction that is, you can see a lot we're back in positive, and then we fall back, and now it's kind of a mixed bag. So we've got Ethereum still almost 8% above zero, indicating average traders are still very much up in profit. And then you've got XRP on the other end, down almost negative 5%, indicating average traders are down money on average. So if you're looking for a few outliers just on the top cap list, Ethereum is a little risky to be adding on right now or buying a new position. XRP is less risky than normal right now. This is, of course, just based on the math, based on how average traders, your peers, are doing. The average traders, on social media, they may all be rooting for prices to go up, but they're constantly competing against each other and yourself to try to buy at the price you want to sell right before it pops, right? Everyone is competing, trying to figure out the ideal market value of their coins. And Generally speaking, they are the people you're competing against because it's a zero-sum game. Not everyone here is even rooting for prices to go up. Some are shorting against you. So keep this in mind. MVRV, in my opinion, is another top 3 metric that you can really take advantage of and use to your advantage. In terms of trending coins, for what it's worth, you see Solana here. We already kind of talked about why, but there's a few additional points. There's a association it has with a new on-chain game called USDC Roulette that operates on the Solana blockchain, highlighting its use of on-chain randomness in cryptographic proofs for fairness. And then the Solana Breakpoint event that we talked about. Luna Classic, as we talked about, the top trending story right now is Do Kwon being imprisoned for fraud. We have Aave down here. It's recognized as a leading DeFi platform. It's praised for its trusted, audited protocol with competitive APYs, instant withdrawals, and per second compounding. A lot of you may already know this. It looks like, yeah, there's some revenue sharing between Aave Labs and the DAO and debates on fee allocation right now, benefiting token holders while maintaining protocol security. So that's the main reason it's trending at the moment. We talked about PayPal USD here at number 4 and its payment option for YouTube creators. And then Chainlink is trending due to Coinbase selecting its cross-chain interoperability protocol as the exclusive bridge for over $7 billion in wrapped assets, highlighting its critical role in secure cross-chain asset transfers and interoperability. So that's your top 5. You can even see XRP down here at number 6 with the launch of Grayscale XRP Trust. I like to check these on a daily basis just to see what interesting news might be a good topic to discuss or post about or write an article about. So make sure you're checking the trending coins, trending words. You can even look up the individual words here, like Kwon, bullish, Solana, especially bullish at number 2. That's interesting. If we sort it with BTC, we can see it's weird that there's a sudden surge and nothing before the 4th, but you get the idea. People were very bullish right at the top, as usual. December 9th, you see a huge spike in people being bullish, and then the price drops right afterwards. I think because it's just me, this is probably a good stopping point. I'm not going to use the full 45 minutes that I was planning on today. If there are any comments, please leave them in the YouTube video, either on the live chat here or on the replay if you're watching on replay. Hope you enjoyed this video. We'll be back with more content later today, touching on some of the biggest news and biggest price swings that might be happening in crypto. And as always, make sure you're following us on all platforms and subscribed on YouTube. Comments always help, whether they're good or bad. We can take it. It's okay. We just want to know your true opinions. And look out for a very fun giveaway being announced in the next 24 hours here. We'll give you the details on our social networks. So stay tuned for that. On behalf of Balance, who could not be here today, our CEO and founder, and on behalf of Max, running a great stream for us as always, I want to thank you all for watching and have a great weekend.